My name is Kamal Warren, and I day trade the FTSE 100.
And do you have any advice on placing stops?
Stops are a vital part of spread betting trading, at least. I personally, some might think that I'm bonkers, but I personally use a fixed stop value, which is 20 points. That's just because I think because I day trade, the markets sort of tend to spike quite a bit, and I really hate it. I suppose most traders when the market is actually going to go in the direction where I think it is going to, but just because a small fluctuation in the interim sort of takes you out, and that is really annoying. So because of that, having looked at the statistics that I've compiled personally for myself, in thinking what is the most safest stop distance going by my trading style, I use a 20-point stop. Yeah, but then again, each individual trader would need to see the market that they're trading in, what level of risk associated stop that they would like to place. I mean, a forex market, the stops that can be quite wide. Or the same instance, if you're sort of a scalper, as what they call it, I mean, it's a quick trader in and out, you use very tight stops. It really comes down to what sort of a risk tolerance you're willing to take.
And can you just explain to everyone what a trailing stop is?
Yes, a trailing stop is where when you open a trade, you'll open at a certain price, and on the assumption that you're placing a long trade, that means a buy, you're expecting the market to go up, and your stops is below, because if the market goes down, then you get stopped out. So trailing stop, as the name suggests, it trails. So for example, you set a limit. When the market moves in your direction to a certain limit, your initial stop moves alongside. So that means if it goes 10 points up, you can place a trailing stop to move 10 points up accordingly as well. So as and when the market is going in your direction, that means effectively when it comes to a certain point, break even and above, you're locking in profits. That's what a trailing stop is.
Now, do you think the operators manipulate the stop loss levels?
Well, I personally think that there are no reasons for them to manipulate the stop loss levels, because I don't know the intricate back engine of a spread betting provider, but they make their money through the spread. Yeah. So I personally don't think why they should, or there's a reason for them to manipulate the stop loss levels. But having said that, there are providers in the market. The biggest provider, probably I don't want to mention a name, that I use, their stop losses are quite good, because there are no slippage, because the market can be quite volatile, and some providers out there, they would stop you out not at a given price that you want to be stopped out. There would be a small slippage, but it's not going to blow your trading capital or anything like that. But it's just a bit annoying, because when you want to be stopped out at a particular price, and you just find you're stopped out at maybe half a pip or 1 pip more or less, then that's just a bit annoying. But the biggest provider in the market, their stops are fantastic. They always get taken out at the exact price that you request them at. But in my view, I don't think there is need for them to manipulate stop loss level, because they just make their money from the spread.